Yeah, I can hear you. I can hear you.
So my name is Francis, but I use my ENS name in Twitter, crypto Twitter. So as at crypto. Yeah, I'm a crypto evangelist. So what I do is I just share with the communities about crypto. I teach people about crypto and blockchain, and I share a lot of activities happening in the crypto space. So the aim here is to just, how do I put it? To just to evangelize, like to show people the positives of crypto and why it's important for adoption, and also the beauty of blockchain. There's a lot of hidden potential in this new technology, in as much as it's still new. That's much about me in the crypto space.
Nice. I think we need more guys like you, you know. Well, blockchain Web3, it's like an interesting technology. And having more guys to pioneer for their mass adoption would be wow. So yeah. So I said we was like going to get started at exactly 7:20. The space is being recorded. Anyone who will not be able to attend could get the recording. So yeah, as Frank, maybe we just get to it and let's see how things unfold. I feel super excited about it.
Yeah, I'm ready for the discussion.
Oh, nice. So the topic of today is stablecoins and regulatory scrutiny. Well, yeah, it's all about crypto, how the central bodies are like going about it. How about how would you define stablecoins for someone who is not familiar with the concept?
The most basic way I would describe a stablecoin, I'd use the most dominant fiat currency, that is the US dollar. It's the most traded globally. So a stablecoin basically is just a crypto representation of the fiat money on the blockchain in the ratio of 1 to 1. So for instance, like I said, I'd use US dollars in this example. There are a lot of stable coins that we'll discuss as the conversation goes on. So for instance, if I say one USDT, that's just one of them, issued by Tether. Tether is one of the stable coin issuers. So one USDT is equivalent to one US dollar. So that's the most basic way I would describe a stable coin. And just to expound on that, there are very many kinds of stable coins. There is one that is being called BUSD, Binance US Dollar. It's also 1 to 1. It was issued by. Hello.
Yeah, I can hear you, Frank.
Just a second.
It's okay.
I'm just putting airplane mode to avoid distractions. Then
Yeah. So yeah, Frank was talking about stablecoins.
yeah, can you hear me?
Yeah, I can hear you clearly now.
So saying there's the BUSD. It was Paxos was the issuer, but due to some regulations, I think I think it's still at hold. Then there is USDC, Sako. Sako is the company that issues USDC. So that's just basically what a stable coin is.
So it's pretty much digital currencies that are pegged to like the dollar. Yeah.
Yeah, not necessarily the dollar, but the dollar is the most dominant. There are some like euro, which is pegged to euro, but the dollar is the most dominant and stable.
Oh,
Well, it's the most known and most used.
oh, nice. I believe that's clear. And the next question would be, what role do you think stablecoins play in the current cryptocurrency market?
Oh, you mean the roles within the crypto ecosystem?
Yeah, right.
I think I'd tie this my response to probably the users first. Then now we may check on like the roles, because so within the crypto asset ecosystem, stablecoins have multiplied in the recent years, and it has been mostly used as a safe, let me use the term safe parking space for crypto volatility. Just like we've said, stable, just from the name stable, we know how crypto is volatile. At one point, uh, Bitcoin was at $4,000, I guess, in 2016. But then I had not known about crypto. 2021, it was $69,000. Right now, it's trading at $27,000. You can correct me if I'm wrong. So that's the first role I can say. There is like it's the role of stablecoins. It's just people use it as a safe space. For instance, if you're not ready for the crypto volatility, you can just convert your assets to a stable coin and you relax. So if the crypto goes down, you're okay. If it goes up, it's your loss. But at least you are it's a safe space for volatility. Then another role I could say, stable coins are like a bridge to trading crypto assets. So, for instance, in the DeFi space, or even if you're trading, let's say you want to trade Bitcoin, and if you want to trade Bitcoin, you can trade it against a stable coin, maybe USDT against Bitcoin. So that's one of the roles that stable coins offer in the crypto space. Although they account for a very small part of the crypto asset markets, but it has a really critical role. So there are so many roles that we will discuss during the session as we go on. And perhaps another important role of stablecoin, they are used as a means of payment. Yeah, you can buy another asset using a stablecoin, and you can also use stablecoins in the crypto space as a means of payment. There are so many, but those are some of the major ones that I can right now discuss.
Oh, nice. You've pretty much made that so clear, and you've listed quite a number of roles of stablecoins. Yeah, and you've also mentioned the volatility. So yeah, that's where now as users they sort of need to do their due diligence and get to know if they're ready for the volatility. Otherwise, stablecoins. So the next question would be, can you discuss some of the key benefits of stablecoins and why they might be attractive to investors and traders?
Just like I've said, they're used as a means of payment. I think it's the same as the rolls. Also, yeah, they can be used as a means of payment. So the investors can use them as a means of payment. Investors can also use them during when the crypto space is experiencing a very high volatilities. They can convert their assets to stable coins and just wait for the market to cool down. Perhaps another important one that maybe we'll talk about in the night as we go on. There are some stable coins that are issued by centralized entities. So such stable coins can be subject to financial regulations such as KYC. KYC, where now the stable, let's say for instance, if you're an investor and you're looking for a legal kind of stable coin, this is just my own view. None of it is a financial advice. Maybe you can go to a stablecoin that is being issued by a centralized authority where it can be tracked easily. So you don't need to fear. Maybe you're investing in some coin that has some kind of malicious background. Maybe it was hacked from somewhere or stolen from somewhere. But now, if you're dealing with the ones that are being issued by centralized entities, you are very confident that it's safe from malicious activities.
Nice. So yeah, to maybe add up, on the KYC part precisely. Well, there's stable coins that are probably CBSD, they sort of have a very clear KYC and it has like a clear traction. So to proceed, the next question would be, what are some of the examples of regulatory actions or statements that have significantly impacted stablecoins market so far?
But before I talk about that, I would like to. Oh, you're talking about some of the examples of regulatory actions.
Yeah.
Well, I mean, there are some existing laws that have been put in place. For example, just like I've said, for instance, stablecoins issued by centralized entities or authority may be susceptible to regulatory scrutiny, and now they need to do some KYC. KYC is just know your customer requirements, where now before you probably deal with them, you have to upload some of your government documents. So using this, the regulatory requirements can be investigated. Then there is also something called AML, which is anti-money laundering kind of regulation. So these are some of the regulatory actions that have significantly impacted the stable coin market so far. And then the regulations have also been driven towards the companies, or rather let me call them the entities. The entities that are in charge of minting, let me call it minting, or rather issuing these stable coins, like I talked about, Sacco, Paxos, and I guess Tether also.
Yeah. Hey, Fabio, still on the context, do you have any input?
Yeah.
I'm seeking to know if Sabio has any input on the context. Then we'll.
Sorry, I'm a little bit of a noisy place, so I will chip in as much as I can. Just a minute. You can continue.
That's okay. That's okay.
Yes.
Okay.
I can,
Yeah. Sorry.
can add a bit of something on the impacts. So I talked about the compliance costs, where now some stablecoins are subject to anti-money laundering and KYC. So these ones may incur additional compliance costs to ensure that they are compliant with the relevant regulations. So these are some of the regulatory impacts to the stablecoin. Then now, things like market access. Regulatory actions can even limit market access for stablecoins by restricting the use of stablecoins in certain jurisdictions. We have been seeing a lot of actions here and there from different governments trying to bar stable coins. We can do some more research on Paxos. I hear Paxos were stopped from minting any more BUSDs. So you can see things like that can also, regulatory actions like that can also limit market access. Then on regulatory actions, probably on liquidity and stability, uh, regulatory actions can also impact the underlying assets or even liquidity of stablecoins. For instance, if a stablecoin is backed by a specific asset that is subject to market volatility or regulatory actions, it could impact the value of the stablecoin. Then another thing that regulations can impact on stablecoins are things like even innovations. So regulations can stifle the growth of innovations because now, let's say me and you are developers, and maybe the country that we come from is too hostile for crypto. It will be kind of stifling our efforts, even in innovating. Maybe we want to develop a stable coin to peg to our currency, but there's so much regulation, so it will stifle innovations. Then things like transparency, that is now a positive. Regulatory actions can require stablecoins to provide even greater transparency in the world of crypto. Then maybe something that I think I should talk of. Hello.
Yeah. We are listening. We can hear you clearly.
Before we go on, I think we need to talk about different kinds of stable coins. I'm not sure. Maybe it's in one of your questions that we will look at later.
Yeah. Actually, talk of regulations, like it in a big way, it bars like the technology, and we're not sure what the underlying technology's potentials are, which is a bad way, I'd say. And so talk of potentials here, you've like listed the potential impacts. Could you like talk more about the potential that regulations has on the market?
I guess I've talked about what I've said is directly impacting the market. For example, just like I said, if probably a country is too hostile towards crypto, like its regulations is too much in crypto, And if it's too hostile, I think how it will impact the market, maybe people will kind of back out of that crypto, and now that one will cause kind of a downside volatility. For example, we saw China, I think it was last year or something, they were saying they no longer want Bitcoin. They were removing the Bitcoin ATMs and stuff. So that's Bitcoin. But in case of stablecoin also, now let's say you are hosting some stablecoins too, I think you'll be bearish on that, and then the market volatility will definitely shoot downwards.
Yeah, that's all right. So, how might the introduction of central bank digital currencies impact the role of regulation on stablecoins?
How might the central bank
CBDCs impact the role of regulations of stablecoins?
Okay, so first of all, CBDCs is a concept where now central banks want to offer digital currencies. So, you want to know how CBDCs impact the role and regulation of stablecoins?
Yeah.
I guess CBDCs are kind of trying to imitate what stablecoins are doing, if I'm not wrong, because CBDCs are just digital currencies. But now the only difference, before I talk about that, is just that now the CBDCs are kind of in the control of the governments, unlike now the stable coins. That there are different kinds of stable coins that I was wishing we look at before we look at this question. Because now CBDCs are kind of controlled by governments, while stable coins are deployed on the blockchain. So some, apart from the ones being issued by centralized, let me just talk about this, then we look at that question. There are different types of stable coins, because I have to talk about it so that it can help me discuss what you are asking me. The different kinds of stable coins. For example, there are centralized and decentralized kinds of stable coins. So, centralized stable coins are issued by these centralized exchanges. Decentralized stablecoins are in the DeFi spaces. Then there are asset-backed versus algorithmic stablecoins. So stablecoins that are backed by specific assets, such as fiat, precious metals, or crypto. Let's say there's a stablecoin being backed by Bitcoin, things like that. And then they are algorithmic. They're not backed by anything, but instead use complex algorithms to maintain price stability. Then now there are things like permissioned and permissionless. So permission just from the name require approval, while permission from central authority. I think now this one is a bit related now to CBDC, and this one may be even susceptible to regulatory scrutiny. Then permissionless are open to anyone to participate. These are now the true DeFis. So now going back to what you are asking. You are asking how CBDCs, if I'm wrong, you can correct me. How CBDC
how they impact the role and regulations of stablecoins.
I think now, just like I've said, CBDCs are centrally centrally controlled, but I've given some examples of stablecoins that are decentralized. Now, CBDC might potentially compete for stablecoins for use cases due to stability and ease of use. And if they're widely adopted and trusted, they could potentially reduce the demand for stablecoins. But now on your question on the regulations, they can be just the same, subject to the same regulations as stablecoins. And this can even, I guess it can, let me say, level the playing field and reduce regulations. So CBDCs will directly affect how stablecoins are being regulated, because I think now they'll start comparing CBDC regulation to stablecoins. However, if maybe governments see that the interoperability of CBDCs and stablecoins can kind of, how can I say, correlate, this can increase the utility and adoption of stablecoins. Let's say, let me use some country like Kenya. Let's say Kenya sees Kenya shilling, let's say a CBDC of Kenya, let's say Kenyan shilling stable coin now on the blockchain is relating well to USDT. So due to that, regulations can be even better, and adoption of even the stablecoin USDT will be much higher in Kenya. Things like that can happen.
Oh yeah. Well, just to add on that, well, I believe CBDC would like lead to competition and demand. Well, what I mean is that the introduction may affect the demand for like stable coins, and some users may prefer CBDCs, and they're like they're generally centrally backed and therefore considered like more trustworthy and stable than private stable coins. I believe that. And then it's regulated. So the general impact would be like regulation. And with its emergence, government may tighten regulations around stablecoins. And these would ensure financial stability and security. Well, these could also include like stricter rules for issuing stablecoins. Unlike you've talked of permissioned and permissionless, I believe these should be permissioned. So managers reserves and reporting financial information. In extreme cases, some countries may even ban stablecoins to encourage the use of CBDC. I'm not in for that, but that's a possibility. And then still on the same point, there's interoperability. Yeah, interoperability is like very key in any technology. Like CBDCs might be designed to interoperable with certain stablecoins, especially those that are pegged to the same currencies. Like, let's talk of cash. Like if CBDC, pegged to like cash, it will be very easy for like the central body in Kenya to like make it interoperable with like other financial bodies or any financial related thingy. Another thing would be financial system integration. Yeah, that will fit in just interoperability. And then innovation and services. Yeah, that will also be an impact. Yeah. So that's it for me. I maybe we'll proceed to the next question. Well, in what way might stablecoins insurers need to change their practice to comply with potential regulations?
Okay. Stablecoin issuers.
Yeah.
I think this question should be addressed to Paxos, Circle, and Tether. But maybe I can give an
Yeah,
opinion.
you could just give your input. Yeah.
I'm not sure about the practices you are alluding to, but
You
they,
could just be like general. Yeah.
yeah, I guess they can just comply with whatever regulation is saying, as long as they do the research and they see it fit for the crypto community and transparent. For instance, maybe I give an example. Fiat is usually printed. How can I say? Can I say no? Aimlessly is a bad term. You see how Bitcoin is can never be reprinted apart from the 21 million. Now
Yeah.
Fiat can be printed. I've forgotten the term. The DeFi term of saying Bitcoin is just 21 million. So whatever that is. Or
Like more of a fixed amount.
deflationary. You see how some uh,
Yeah.
ETH is deflationary, but Bitcoin is scarce. Yeah, scarce was the term I was looking for. So, for example, maybe the stablecoin regulators, I mean the stablecoin minters, can maybe they can come up with or rather they can take in regulations that requires them not to over mint stablecoins, so that either it be deflationary or scarce, instead of just minting a lot of coins to flood the market. So, for example, I'll take example of asset-backed stablecoins. So let's say if a stablecoin issuer is backing their stablecoin to Bitcoin, then the regulation should be such a way that it must never surpass the supply of Bitcoin. So using that kind of regulation, it will regulate even over minting of other stablecoins. And if maybe it's backed with something like ETH or other deflationary token, there can be a regulation in such a way that whenever a stablecoin is minted, there is something being banned, so that it brings about balance. But now in the context of regulations, maybe they can comply with regulations such as bad actors in the market, such as maybe if there is act of fraud, they can be traced and the stable coins can be, let me say, blacklisted. So regulations towards fraud and bad actors in the market can be adopted by the stablecoin issuers. That's just according to me. NFA, beyond research.
Yeah. Beyond research, it's very key. Well, yeah, you've talked of belief reserve. So yeah, it will be like really key in reserve management. Well, this basically ensures stability and trust in the regulators, yeah, and it might require issuers to maintain full reserves with the stablecoins and restrict the type of assets that can be used as reserves. Yeah, that's the banning thingy comes in. And then another one would be like licensing and compliances. We've mention KYC and anti-money laundering. These would be like very key stablecoin issuers. Like they might need to like just obtain license to operate in certain jurisdictions. No more of a bank thingy, but the sort of it will be like really key. And then in customer protection, yeah, customers need to be protected. Like they basically believes in you, and they think this is now the best. Yeah, so it will be like really key in customer protection. Sorry, I cut you short. You needed to add something?
No, I was just responding to your sentiments.
Oh, nice. Well, the next question would be how might increased regulatory scrutiny of stablecoins affect their role in decentralized finance system?
Okay, on the DeFi area, maybe I start with something like liquidity.
Yeah.
Stablecoins are usually very key in source of liquidity in DeFi. For example, if you go in a DeFi marketplace, when they look for liquidity providers, and let's say, God willing, I'm a whale maybe in the future, and I want to provide liquidity for something like PancakeSwap. Now I have maybe 1 million USDT.
Yeah.
Worth of, let's say I have 1 million US dollars worth of BNB, but now the market is volatile, so I convert it to USDT. Now, that's how important stablecoins are in the DeFi. Now I've provided about 1 million USDT in terms of liquidity. Now, regulatory scrutiny might affect liquidity of stablecoins. For example, if stablecoin becomes subject to restrictions or requirements that they limit their liquidity, this could reduce the amount of liquidity available in the DeFi protocols. Because now, if probably I see that there is too much scrutiny on my USDT, I'll just convert it back to something else, and then now I shall have withdrawn a lot of liquidity there. So that's a way that it could affect DeFi market. Then perhaps again, I'll still talk about innovation. If there's too much regulatory scrutiny, it will stifle. It will kind of dwindle innovations. DeFi was meant to according to me, DeFi was meant to give the power back to the people, to free people. But now, if there's too much regulations about how I'm creative, or rather what I'm doing in the space, I won't be free to showcase my innovations. So it will reduce even the DeFi projects being launched. For example, if I want to launch a marketplace, probably a DeFi marketplace, but there's too much regulations and stuff, I'll just say it well with it. I'm not launching it. There's too much regulation, so it will reduce innovation. Then, because of regulations and compliance cost, we've seen the cases of some. Let me just mention them by names. Things like local bitcoins shut down, Paxful shut down, but they came back. I don't know what magic they used. There are a lot of, even before we knew crypto, I'm sure there are some kinds of marketplaces, but because of too much regulations, they shut them down because they don't want problems with the regulators. Then maybe another impact could be on, I guess, compliance costs. If there's too much scrutiny, regulatory scrutiny, the stablecoins may be faced with increased compliance costs. Maybe there are some taxes that need to be made, or a lot of compliance. So this can even make DeFi less competitive to the TradFi or even non-DeFi projects, because now the DeFi side is facing so much compliance. So this one is tied to innovation. So since there's too much compliance, the DeFi space will not have so much innovations going on. And as compared to TradFi, their finance system will go up compared to DeFi because of too much problems with the regulators. Then perhaps maybe a last, let me talk of the two last ones that I think about. If the regulations are too much, it will lead to greater centralization. So this one will even reduce decentralization, because in this context we are talking about decentralized finance. But now if there's regulations all the time, which means there's a central authority in charge of checking things up all the time, legal compliance and blah blah blah. So this one will reduce the DeFi ecosystem. It will be becoming even more centralized. Probably one that I think of is maybe even interoperability, because due to stringent regulation, it will reduce interoperability with other DeFi protocols. So for example, if there's too much regulations with maybe one stable coin, let me say USDC, it has too much regulations. People will not want to kind of use it here and again, so it will reduce interoperability. Yeah, those are some of my thoughts on that issue.
Oh yeah, nice. Well, just to add up like two more points. Well, with increased regulatory scrutiny, there definitely be reduced anonymity and privacy. Well, yeah, DeFi's appeal partly lies in the privacy on the pseudonymous nature of transactions, like we all know. But the anonymity aspect is like very key in like blockchain and Web3 tech. Well, yeah, if regulations mandate know your customer, that's just the KYC and ML, anti-money laundering, compliance to stablecoin, and yeah, this definitely is gonna diminish the appeal of DeFi for some users. And just the last one would be like it definitely have an impact in DeFi services. Well, certain DeFi services such as lending and yield farming rely heavily on stablecoins. If regulations change how stablecoins function or are issued, these services might need to like adapt. Yeah, they need to be quick to making like probably the new changes. Well, yeah, for example, if stablecoin issuers is required to maintain 100% of reserves, this could affect the liquidity and interest rates for DeFi lending. Yeah. That's it for that question. I have two more questions for you. Well, the second last would be, could you explain the concept of reserve transparency in the context of stablecoins and its importance in the face of regulatory scrutiny?
Sorry.
Explain the concept of reserve transparency in the context of stablecoins and its importance in the face of regulatory scrutiny.
Reserve transparency.
Yeah.
Mhm. Um, I think just from, but you may correct me if I'm wrong. It's just from the name.
Yeah.
It's just transparency around reserves. Like, for let me use USDC. Maybe transparency around reserves of the USDC coin. So, so these stable coins, they are designed to maintain a stable value, maybe relatively to underlying asset or the asset that is backing them up. So the first thing that is important, I think transparency around reserves may revolve around stability. So maybe the stability of the stablecoin may depend on the ability of the stablecoin issuer to maintain adequate reserves. So there's usually a concept where I've seen a lot of centralized exchanges use it, proof of reserve. So this one just means, this one is not in the context of stable coins, but I'm just giving an example where in case maybe something bad happens to a centralized exchange, there is a reserve that will be used to compensate the users. So that's just an analogy that I can use to explain reserve transparency. So you will find a stablecoin issuer needs to not convince, but to prove that they have reserve and it's transparent around the users. So another reason that this is important in the context of stable coins is trust. So for instance, for me to trust, uh, let me use this time BUSD to use it, I need transparency around it so that it can increase my trust on using that stable coin. So people tend to trust stablecoin which is fully backed and can be redeemed for other kinds of assets. Then maybe regulatory compliance. Yeah, so stablecoin issuers need to maintain the regulatory compliance, require them to maintain adequate reserves of the underlying assets. I guess those are some of the major talking points in the context of stablecoin. And this one aim to set standards for the quality of assets in reserves and require the stablecoin issuers to report on their reserves. I guess there is usually some kind of a bill. Is it the Stablecoin Transparency Act?
Yeah.
It,
Yeah.
yeah, it aims to set standards for the quality of assets held in reserves, requires stablecoin issuers to report their reserves. So, yeah, just like I've stated, the proof of reserve, it will just provide kind of assurance to users. So, if probably you're planning to use a stablecoin, you need to check on such issues, and they need to be transparent so that you can trust them and use the stable coins. So you check on the stability and the risk management and if they are compliant to jurisdiction. So once they kind of tick all those boxes, and it's transparent to anyone can check and see. For example, let's say USDC says that they're they're backed by, let's say, Bitcoin. So they need to be transparent about it and even issued a wallet address that holds those Bitcoin. Every time you feel like checking, you can see, yes, indeed, they're backed by 1 million Bitcoin. So yeah, this is a safe coin, things like that. And maybe when the news are out, you can see that maybe they are complying with the regulatory requirements, yeah, and stuff like that. That is my on that question.
Actually, you've mentioned like very key points, which are so. My last question before we give our listeners the opportunity to ask questions would be: are there any specific stablecoins that you think are particularly well or poorly positioned to face regulatory scrutiny, and why?
That one will be like shilling, so that one I'll leave to everyone to do their own research on that. For example, if I say stablecoin A is good and stablecoin B is bad, I think that one will be like shilling stablecoin A and turning the name of stablecoin B. So for that, I guess everyone just needs to keep up with the stablecoin that they use. For instance, if you're using USDC, you need to be checking every now and again if they are doing well. If you're using USDT, you need to be checking. But for me, I guess I can't outright answer that question that you need to use the stablecoin. It's properly managed. And don't use this other one, because in crypto anything can happen anytime. Who knew an uncustodial wallet could steal funds? So people can I guess for that everyone needs to make their own decision on that.
Yeah, that's true. Actually, I won't also attempt to answer that, but some key factors I'd ask guys to look up for would be definitely trust and credibility, and look at the financial stability. I look at the prevention and fraud management. And then lastly, the list is so long, but for now, that's what I have. Look at the regulatory compliances. Those are like very key. So that's it with the questions that I had lined up. And I'd love to get questions from our listeners. You could just request to speak, then I'm add you up. Tiai, John, Nia Kenya, Minai, Nation. Any question? Any addition? Oh, okay. Since there's no question, well, John, you have a question? Okay. There's it. Well, sorry guys, we had our Twitter acting up some technical issues, and we sort of had to just create a new link like ASAP. And was clear. A minute. Speaker. Yeah, thank you, John. Yeah. So we had to just go for an alternative bit, and I believe the session was good. All the insights that Frank gave were super clear, and really informative. And I hope that definitely next time, we're not gonna have the technical hitches. And thank you guys for joining in. And you could follow us up. We'll be doing this like every week. Yeah. So cheers, guys. Thank you, Frank, and hope to have you soon.
Yeah, you can also do me a solid and follow I usually have a Web3 podcast. You can also listen in DYOR podcast show where I speak to people in the Web3 industry. So you can also log in and look it up in all the podcast distribution platforms, Spotify, Google Podcasts, and Fountain. And thank you so much for listening in.
Nice. Before I end it, there's a personal feedback. Frank Hazard be doing some hot stuff, and his podcasts are like really good. I just check him up. It's like good. I do listen to them every time. So thank you guys, and have a good one. Cheers.